What's up, everybody? Jonathan Rose, owner, Masters in Trading. So for those out there that routinely watch my videos, you know that I don't think technical analysis alone is enough. I think we have to dig deeper. So what's really important is every single trade that I do, every single trade that I share with my members, there needs to be a reason behind that. So today, let's focus on education. And I want to share something that is pretty high level. It's a little advanced, but it's a life lesson. It's something that you could use forever. Before I get started though, I always notice these videos have 500, 600 views in the first day. Do me a favor. If you like the video, give it a thumbs up. If you don't like the video, give it a thumbs down. Leave a comment. Introduce yourself. If you have any questions, ask. If not, let me know what you think about the video. I just want to hear from you. I want to continue putting out great content that you find valuable. If there's other topics that you want to hear, leave it in the comments. So here goes. The CRAK spread. Have you ever heard of the CRAK spread? Let's go to Wikipedia so I don't plagiarize. The CRAK spread, it's a term used in the oil industry and futures trading for the differential between the price of crude oil and petroleum products extracted from it. The spread approximates the profit margin that an oil refinery can expect to make by cracking the long chain hydrocarbons of crude oil into useful shorter chain petroleum products. So the CRAK spread, to sum it up, it's just the profit margin that an oil refinery can expect to make. So how does that help us when it comes to trading? First, you got to learn how to chart the CRAK spread. Luckily for you, I'm going to give you the shortcut. 42 times /RB minus CL is the most basic way to follow the CRAK spread. It's how I follow it. It's how I've always been following it. I charted it in front of you going back to about mid-2017. Now let's talk about the mean, the middle. Let's say the mean is right around here. If we do that, when it gets high, the oil refineries are making a ton of money. When it gets low, the oil refineries are having a difficult time making money. So watch what I do next. In Thinkorswim, you could just hit the beaker. The beaker pops up, go to comparison, and I just took an oil refinery ETF, CRAK, C-R-A-K. Now, CRAK's biggest holdings, Phillips 66, Valero, Marathon, Reliance, HollyFrontier, all the biggest oil refinery companies. So let's look at it now on a chart. I'll take off this red line, which was just the mean. If we look at this ETF, going back as the as the CRAK spread rallies, profit margins are going higher. So what does the ETF do? It rallies. As it sells off, there's a delayed reaction, but the refinery index sells off. It stabilizes, starts going higher. Again, the CRAK spread sells off first, and then the oil refineries sold off a month later. Again, rallied, never really caught up with the rally because right here, it got crushed. So right now, with the profit margins 3-year low, we probably expect oil refineries to trade lower. So what I do with my coaching clients is I want my guys researching. It's not enough just to do CRAK, C-R-A-K. The next step is we drill into oil refineries and find which ones are expensive relative to others within the industry. Because remember, the CRAK spread is just telling us the profit margin. If they're all in the same industry, the profit margins are all getting squeezed. So if we can find some refineries that are expensive to others, at least in my opinion, that is a damn good trading opportunity. These are the trades that we look for. These are the trades that I share every single Sunday with my Masters in Trading members. You want to try us? I'll leave a link. Masters in Trading /YouFree. Check us out for a free week. See if it's a good fit for you. Again, leave a comment. Let me know what you think. This is a very, very reliable way to find trades. And right now, with the oil refinery profit margins getting low, with the crack spread going lower, if you can find some expensive oil refineries, I like that trade. I like it a lot. Hey, thanks for listening, guys. Again, Jonathan Rose, owner, Masters in Trading.